I want to go over this trade that I took on ES and how you could have understood that we were going to go higher before lower on April 18th of today. This is Thursday on the S&P 500, and I think there's a lot of good education behind this trade and the importance of utilizing the midnight opening price when you are in any kind of market condition. So this week has been a lot of seek and destroy, but yesterday was nice and today was also good. But when you have this significant market structure shift on the daily time frame like we did, there's no reason to continue to try and be bullish until something says otherwise, right? So now we have sell side targets down here. This is where my focus is, especially since we now just closed below this volume imbalance. And what I was looking at today was this here. So once we had this low was from yesterday. This was PM session low, or yesterday's low of day. Excuse me. So mark that out. Make this red. And so we had a sell-off overnight from the London session, and early morning in New York, we took out this swing low. Once you have an hourly key level like that taken, you can anticipate the other side of the range to get or to act as the drawn liquidity, especially when the midnight opening price is up here. Smart money is not going to be selling to buyers in a discount, so they're always going to bring it back to a premium. And what I mean by that is from this swing high to this swing low, you can see what happens, right? Draw at OTE, we hit the 62 and then sell off. So this is what I was looking at. The 15-minute tells the story. Let me go in replay mode a little bit. And this is also the effect of turtle soup. So we have a strong candle close at 9:30, but respecting this sell side liquidity pool inside of this order block. And if you go to the 1 minute, you can see what that looks like, right? Sweep liquidity, 1 candle, 2 candle, 3 candle, 4 candle, 5 candle. So 6, 7 minutes, and then we finally get some displacement higher. And now what you're waiting for is price to return to a level of sell side liquidity, in this case these relative equal lows, and then a move back up. So look what happens. Boom. Look at the wick. 1 candle, 2 candle, 3 candle, and 4 candle is where you get your change in the state of delivery on a lower time frame. So this is the 1 minute, of course, and that's what a real turtle soup looks like. When you get a sweep of liquidity and you get this fast, explosive move away in real time, that's what you want to see. And you could just be buying either as soon as we close above this level or a retest into any PD, right, or into this 2 down close candles. And you can see the 5 minutes super clean. Look at all these relative equal highs up here with the midnight opening price. Smart money simply just wants to sell above the midnight opening price in a discount or in a premium and then take it back lower. We know that we're not going to continue and be bullish, most likely. Not today, when we only had one event of high impact news at 8:30 and it didn't do anything. More importantly, look at this short setup that formed overnight. If you look at the 15-minute, it's super clean. What do we have here? Move up, back into a premium of the range. Of what range? Of this range. The range that started the move, right? Look what happens. Where do we hit? 62, almost OTE. What does smart money do? We get a market structure shift right here underneath this low. Right, we close below midnight price. What do we leave? A fair value gap. Price, smart money sells above midnight. Where do we go? Into any form of sell side liquidity. Boom, boom. Any of these lows you could be looking at to take profit. And what does it do again? Hits an objective of sell side. Goes back into a deep discount. What discount? Of this range. Hits OTE. Where do we run? Liquidity above midnight. All this is one big turtle soup. One more time to midnight at 9:15. Sell it off into this low, which was now unprotected because we already hit our objectives of buy side liquidity. So now if you break all of that logic down on the 1 minute, this is what I was looking at, and this is the trade that I took. We get our change in the state of delivery on the 1 minute. If you look at the 2 minute time frame, we're still inside of this gap. So if you don't know what you're looking for, you could be kind of scared here. We're inside of this 2 minute. You can see where candles are barely outside of the box. And if you don't know what you're looking for, you can be very scared and you're not really sure where price is going. But this is all you need to see right here. We get a retest of the down close candle, which is where our change in the state of delivery occurred. Big displacement through, and now we leave a 1 minute breaker with the fair value gap. And now we have this old equal highs up here that should act as support. So this is real resistance and support right here. That's what ICT deems as real resistance and real support. Old highs and lows that actually have an impact. You can see where price is. Candle bodies almost respect that perfectly. We are inside of this breaker 1 minute. And where can you target? Either high of day, which is already 6 handles from this entry here, or you can target low hanging fruit at this swing high, and of course above at all these relative equal highs. Look how clean these highs are. And that's why you always just want to be taking profit either at a swing high like this or at a certain money number, anything that makes sense for your risk to reward. Because your price doesn't have to come all the way up here. When we play price, our TP1 gets hit nicely and stalls a little bit, retraces one more time into that inversion, and then goes right through all of these equal highs up top. But all this is just a manipulation of the morning session just to sell off later in the day like that. So once again, the importance of midnight opening price, understanding draw and liquidity. Where's our draw? This equal low, or this relative equal low down here with this one, which was engineered off of the turtle soup from right here. And this is how you frame a trade. This is how you frame a trade from top to bottom, higher time frame analysis. And I also took this trade because there was SMT. So this is the low from yesterday, PM session low from yesterday. Here is PM session low from yesterday on NQ, and you can see that ES was the much stronger asset. And even if I play price right here, you can see it took NQ a lot longer to get up here. So we didn't come up to our midnight price or these equal highs up here until 1037, and here's 1037 on ES. Here's 1037 right here. We're already through all these equal highs. So that's why you want to be longing the stronger asset. But I hope you guys found this video helpful. If you have any questions, let me know down below. This is how you frame a trade from the higher time frame to the lower time frame with all the logic, with highs and lows being ran, SMT, time, and just understanding where price is going to draw with the midnight opening price and premium and discount ranges. But I hope you guys enjoyed, and I'll see you in the next one.